Jim Reynolds, the co-founder and chairman of Loop Capital Markets, and of course Adam here as well. And the thing is that though Mike is laying out all these great reasons why we may see there's a lot of risks in the economy. However, the stock markets have gone up in the last 2 months.
Well, stock market's gone up, dollar's gone down. Commodity prices have gone up significantly, and there's a legitimate amount of concern around what the Fed may do. You have to take your hat off to Bernanke, though, his willingness to acknowledge the weakness in the economy and to try to do everything that the Fed is capable of doing. I'm a proponent of QE2, and I know that the economics community, by and large, is negative on it. Primarily because of the impact on the dollar and the inflation
deficit,
the budget deficit. But I'm not a proponent of it by itself. I think QE2, along with some sort of targeted fiscal stimulus, would make a much more significant difference.
Well, they're not likely to get the fiscal. So does that leave us at risk of disappointment if the markets don't get enough of a lift from QE2? Do they then go back down and we fall back into a tough economy?
Mm-hmm. Well, the bond's telling you that. The long bond's telling you that because it had a very tough October. The dollar's telling you that because they're concerned about the Fed turning on the printing press. I'm not really going to, Ken Langone was here a second ago, and we differ a little bit, but we agree more than I thought. Mm-hmm. But I would love to see the Republicans, when they do come January, take control of the House, which we assume that's going to happen. We don't know the Senate. Sit down and think about whether or not a targeted stimulus makes sense. I know that right now they're saying stimulus is dead. But if they sit down and they have small business, which is where the jobs are going to come from anyway as we move forward.
I just can't see that happening, though.
But
Fed stimulus, and then you add on to that. I just can't see that in this environment.
You can understand with QE1, they actually needed to create bids for bonds. They did that. Now
particularly the mortgages.
Yes. Now those bids exist. The markets are healthy. What does throwing more money just at more bonds do? Why not actually go after, as you said, the targeted fiscal stimulus? I know it's hard to do, but why not actually just hit the nail on the head with that?
Well, that's why I think it would be
Go
wise.
down to D.C. and we'll find out.
Right.
That's why I think it would be wise for Bernanke to sort of have an amorphous, sort of vague announcement, i.e., not that we're going to buy $100 billion a month or $120 billion a month, or not what the amount is, but that the Fed would stand at the ready to do. It was almost like Paulson was saying with the agencies back, would keep the bazooka in your pocket so the market knows you may use it.
So you're saying to do something but leave open
what it is and the amount that they do.
Well, is there event risk in that, though, that markets don't get enough on Wednesday and
I think there's risk no matter how you slice it, because the market is already saying that they're concerned about it on long-dated bonds.
Okay.
So I think there's not an easy, clear-cut answer here.
I want to talk banking, Jim. We had pretty good third-quarter results from some of the major banks. How is the election? How is their outlook going to change after the election?
Well, it's interesting. I think that we talked a little bit about the Goldman Sachs story, the fixed income numbers.
Right.
I want to touch that before we move on, Betty.
Okay.
And if I look at what's happening, they talk about Goldman Sachs maybe losing its edge in fixed income trading. Mm-hmm. This quarter coming into the July, August, September quarter has been absolutely one of the worst for fixed income trading that we've seen in recent history. When you talk about the banks, the investment banks, their numbers, their fixed income trading numbers, Adam, have just been horrible.
Yeah, so down across the board, whether it's Goldman, Bank of America, JP Morgan, et cetera.
Everybody's. Yeah. So if you're going to lose market share, as a matter of fact, I wouldn't even call it losing market share. I would call it prudently managing your business and let somebody else trade those bonds for those small spreads. Then I think Goldman did a magnificent job.
So this is not
spoken as a long. Are you long Goldman Sachs?
No, I'm not. I don't own it. I'm not talking my book there.
Okay,
I'm not.
Okay, so the bright side of the story in that then is
they've really done a good job. I mean, you didn't want to dominate fixed income trading this last quarter. If you dominated fixed income trading this last quarter, you probably had more losses and had a very ineffective use of your capital.
Okay.
So
Okay, so answer the other question.
Okay, what was it again, Betty?
The other one was, how is the outlook going to change for them after the election?
I think there's a couple of things. One, we still have FinReg hanging out there, which is, I think, it has been a big issue for the public. I think it's been a big issue as to why we're here, and maybe it's been a diversion for some of the incumbents that probably should not have been focused on FinReg and should have been focused on figuring out how to find jobs for some of their constituents. But be that as it may, we are going to start getting the sort of the guts filled in around FinReg to see what it looks like. And we don't know. We know that they've taken some from the banks. They're going to take some of the more profitable areas away, prop trading, being able to own hedge funds, and those sorts of things. We know they have to and have started to.
But do you subscribe to that view, though, that revenue is going to slow down over the next 10 years?
Yes, for certain businesses, because when you get out of the capital markets business, which is some of the best businesses that they could be in, certainly. But they have a chance to make it up in the pure lending business, which is what FinReg is really intended for them to do.
Jim, spoken like a true professional.
I'm a trader.
Yeah. Great to have you with us.
Thank
Jim
you.
Reynolds of Loop Capital.